Welcome. We are back. Another day in the market. Hopefully the audio is all right. And yeah, today was a red day. We did see a sell-off. If we go back to last night's stream, let's see what I was thinking about the overall markets. Let's do a quick replay. Here's what's going on. You don't have to be a genius to see this. On the daily time frame, the S&P 500 is making a lower high, right? Had an amazing rally pretty much the whole entire year. We put in this high at the end of July. August was not so much of a great month for the overall markets. We got a rally towards the end of August into the first week of this month. And now, over the past few days, you have started to put in a lower high. That's really the first time you've done that since since last. Right now, this is the first on the MACD stuff. So, two clear levels to look out for on the SPX S&P 500 index. Number one, to the downside, if this keeps selling, 4448. All right, you heard that. To the downside, if it keeps selling, 4448. Let's go back to the charts now. All right, let's head on over to the S&P 500. Low of the day today, 4442. 6 points on a down 1% day at one point. Not a huge difference, but you can see this was the level I was looking at last night on stream, and we gapped down a little bit at the open. We sold off, and we pretty much went down to tap that level. We tested it, we bounced off of it. So it wasn't that confusing of a day, right? We had a clear next level of support. We saw some selling pressure in the morning. We went down to the support. We bounced off the support. That's pretty much what happened. So now we can zoom out here a little bit and start to look at potentially a triangle pattern forming. Needs some more work, But this is where we could maybe, because we're starting to have a defined high. I wouldn't say a well-defined high. We're starting to have a high put in around 45, 30. That's that lower high I was talking about last night. So with that, if we zoom out over here, it looks like this triangle is starting to form. My overall prediction for the rest of the month, if you saw last night's stream, was more of like a choppy sideways market. We've had a lot of ups throughout the year, and then last month was kind of straight down. I can see more of like a calmer market this month. We don't have any huge catalysts. For right now, I know we're going to have our typical GDPs and CPIs and FOMC is always coming up, but we're past earnings. We already saw both a rally and a pullback this year. September seasonality can be a little bit difficult. So this is kind of the time where we can start to see traders digest that type of move, right? So that's really the main thing I'm going to be keeping an eye on short term. Do we continue to consolidate? And if so, I don't see much of movements for swings and stuff like that. You know, there might be some other sectors that start to heat up. So if like there's a hot sector, sure. But for the most part, large caps, value stocks, you could see a slow movement for them. So that could lead to a period of, at least for me personally, just primarily day trading around the open, which is typically where you're going to see the highest amount of volume. So in a drier market, one way to get volatility, if you're looking for volatility, which most short-term traders do, it's been a long day, is pretty much just trading the market at open. So I've been doing that live. All those are posted on my channel. If you go to the past live streams, you can see my live morning trading. And I pretty much go live and premium around the open. I record it to post it on my YouTube once I'm done. And today was pretty good. Went 2 for 2. I was swinging NVIDIA puts, so I ended up taking profits on those. And then I also did some QQQ puts for like a quick 40% in 10 minutes. But very classic setups, nothing too crazy. And yeah, let's talk about what the market's looking like heading into tomorrow. Just give me 1 second. All right, if we go down to the 4-hour time frame, actually I'll take it to the 1 hour. I have a couple more levels here. You can see a little bit closer that, you know, you somewhat had a couple highs around this area. You bounced off it today. The most recent one was this high from August 24th, where you kind of back tested that today. And currently you are showing a little bit of hidden bullish divergence on the MACD oscillator. So heading into tomorrow, right at the low of day, we got this bullish pin bar candle. We started rallying for the last few hours of the afternoon session. The MACD is curling. We've got a gap to fill to the upside. Go over to the 15-minute time frame now, even lower. Right? Start to zoom out here. Get the bigger picture. Maybe has a little bit of a cup in hand to look to it, whatever. But there's not a lot of resistance just above you. Okay, there's not a lot. I'd say at least until 44.89. You want me to drop that level? You can see it's this high over here, and then somewhat your high of day today for the most part. So as long as this low holds tomorrow, potentially what we could see is just a recovery rally to fill this gap, and then I have no clue what happens there. It could act as a resistance level. You could break above it, we will see. But the line in the sand for tomorrow is just simply today's low of day. Today's low of day was a huge support level. If that breaks, then down to the next level, which could be quite a bit lower. But for right now, you could see a little bit of continuation to the upside unless some news comes out. That's my overall thought process. I'm not going to be live trading tomorrow morning or trading the open at all tomorrow morning because I'm going to be busy. But I will be seeing that from the sidelines to see whatever happens. All right. Pretty similar day for the QQQ. You are starting to show some hidden bearish divergence. Again, this is your second high or the type 2 reversal potentially at the pattern completion zone of this bearish shark on the daily. All right. This is a very major pattern. It literally started at all-time highs for the QQQ and it completed last month in August. All right. So 2 years in development, you just completed it and you're potentially getting more confirmation of this pattern now. So the longer term view, until we break above new highs at like 387 on the Qs, the longer term view, in my opinion, is bearish. You're developing hidden bearish divergence. You're starting to lose that volume that you were seeing earlier in the year. There could be some longer term exhaustion going on here. What can give us a better reading of that? The weekly time frame. Let's head over there. You can see the same pattern. But if we zoom out on the weekly, you actually have buy your exhaustion. You have classic bearish divergence. You just recently also had an overbought RSI. So right now on the weekly, you are seeing a shift. Had a very strong uptrend all year. Technically, you're still in an uptrend, and for right now, can just be considered a pullback. Let's take a look at the percent move from high to low. You did not hit 10%, so it really wasn't a technical correction. For right now, all we saw was a pullback, and now we're just continuing the trend. But if you cannot break to a new high in the trend, not great, not great. So we will see how this plays out in time, but apart from that, nothing really changed too much in the market. Let's look at some other names, see what happened. I did say last night on stream that I did have some NVIDIA puts I was swinging. I took my full profits on those today. I think, I did on the live trade. You can go back to the stream and see exactly. I was literally calling out every single time I took profits on it. I think my average take profit was like, if you combine all the percentages on each of my take profits, it was like 50% profit overall for the trade. So pretty decent. Maybe there's more selling in the week, but I liked the profit, took it, moved on. It was literally like 40 minutes of trading this morning and I was done for the day, up 1100. Didn't have to make it that much complicated. So just to reiterate, you had a lower high in NVIDIA, you had a daily bearish engulfing candle. The stage seemed set to me, at least for a short-term put trade. And then we started getting this bearish flag. I think I actually charted out live on stream in the morning. Started getting that bear flag playing out. And I was taking my profits. I think I took my profits. My first profit was when it hit this level. And then I fully got out of the trade at that level. And then it just kind of stayed around there for the rest of the day. So that was pretty much it for NVIDIA. Tesla was down a couple percent today. It's really just had a few inside days for right now. It hasn't broken below 245-ish really, and it hasn't broken above 260-ish. So a little bit of a 15-point range there. We're going on to pretty low time frames here. It's 15 minute. You can see that right now we're just starting to consolidate, very similar to the market. We were talking about Tilray last night. Unfortunately, that could not confirm a breakout move today. Instead, it did the opposite and printed a bearish engulfing candle, so not great there. And then the big one from today, which did not do well at all and has officially made new all-time lows, is AMC. So let's go over to the news. And AMC Entertainment sees largest drop since 2021 on plan to sell up to 40 million shares. All right. So they entered into an equity distribution agreement with Citi, Barclays, and Goldman Sachs. I don't know what the rest of the details are over here, but your stock's falling a lot, and then you're trying to raise more money. They also did announce the Taylor Swift show. I'll be honest, I don't get the whole entire hype around that, but it's expected to earn north of 70 million. Like, I don't know. I feel like they've had a lot of opportunities. I'm really interested to see what their revenue over the past few months look like. With now they're going to have this Taylor Swift thing. They had Oppenheimer, there was Barbie, a few other pretty decent movies with high sales this year, and they're just not performing in terms of share price. So rough move today for AMC. There's technically no horizontal support at these levels. This is the lowest it's ever been. It was not able to hold that 1050-ish area, which it was pretty much bottoming at before the crazy 2021 move. And that was it for the most part over there. Let's see how the swings did today. NEO was alerted very recently, I think literally today. Pretty much at the same area. So what am I seeing over here on NEO? The first thing I was looking at on this one was this golden retrace. Pretty much hit a 618 and it's been consolidating there since the middle of August. You also created this bullish hammer candle, kind of, at the 200-day moving average, and not once have you closed below the 200-day moving average. Sellers have had the opportunity to do that since August 18th. All they had to do was drop the price a few more percent. And since August 18th, sellers have not been able to drop the price lower than $10 for the most part. And when they did, it was immediately bought back up and created a bullish hammer candle with volume. So you also have a MACD crossing over towards green. You have hidden bullish divergence on the RSI. And if we zoom out, this is a huge level, 1058. Take a look at this high. Let's look in the past. Take a look at these lows. Take a look at these highs. It's a historical level. You can maybe create like a scuffed pattern argument, kind of like a downsloping channel. There's that too, but I don't really want to focus on that too much for right now. AMD came into today with the potential breakout test. It still has not broken out of this wedge yet, but it is comfortably above support. You're just finding a little bit of resistance here around 112. It's not a huge level historically, but over the past 3 weeks, it has not been able to break it. So 112 is currently where it's at. Some older swings, end phase, really hasn't done much. It's a very large bullish shark, sitting above a historical support. It stops right under that support if it breaks it, but maybe it tries to catch an equal low to its August lows and start bouncing there. Hopefully it does. And then finally, Lucid testing support. You can see there were some major bottoms here from the past, such as the end of 2022. At this point, I would probably just extend this wedge out. It's probably just a larger wedge, and it's not broken out. All right. Apple today, down 4%. It's now once again going back down into the previous resistance zone to potentially test it as a support. If this bounces twice off of this zone, that would probably usher in a whole entire new trend for Apple, right? Because once you came back down to this area, which you rejected for like almost a full year, if you were to bounce off of that again, let's go over to the weekly. Let me just extend both of these drawings over to the weekly chart. First of all, you're in a bullish trend on Apple. On the weekly time frame, you can get hidden bullish divergence, and you're back testing a breakout of a right angle descending running away. So strength in one of the largest, I don't think it's the largest stock by market cap. It might be, but strength in one of the largest, if not the largest stock in the world. All right. Yeah, apart from that, it really wasn't too crazy today. I'm not seeing anything that moved a whole bunch, so there's not a lot to give huge updates on. AMC was kind of like the big mover there. Pfizer is not able to do much after this wedge breakout. This is the lowest price for Pfizer since the COVID crash. So it's pretty much equaling its COVID crash lows. Well, no, that's 2021. Sorry, the COVID crash was 2020. It's not all the way down there just yet. It's back to some lows from 2021. That was not the COVID crash. Everybody has their own take on this probably, but I think a large, easy part to this, without being political or anything, is during a pandemic, they were at the forefront of vaccines. I don't know what anybody's stance is on that right now. I don't want to get into it. This is just about stocks tonight. They're not in the media as much as they were before. They don't have the same attention like they did before. You know, a lot of charts that look like this, which are a lot of the COVID types of stocks, they're the classic. If you go on Google and look up Wall Street cheat sheet, whatever that chart is about, like trading psychology, it's like you have a run of euphoria, then you have a pullback. It's like all the fear and greed type of stuff. It just looks like one of those charts where had a lot of buying pressure based on emotion and a lot of selling pressure to balance that out. So JetBlue, another one that was down 5% today, which is pretty rough. Also, are these all-time lows for JetBlue? Not all-time lows, but lowest price since 2012, so in over a decade. Roku had a pretty crazy move. It looks like at one point today, it had gapped up, and at one point today it was up 15%, ended up only closing up 3%, kind of went up to this $96 level, which matches these lows, these high, this most recent high. It tapped that level and then started rejecting it. Literally filled the gap on the same day and then bounced off of that. So a lot of interesting stuff taking place here. This is a very educational chart. So take a look at this. I'm going to draw out this level. I'm going to draw out this line. Right, so this has the ascending triangle look to it. This is something that really I have been focusing on a lot in the past few months. I've been taking away a lot of the more complex patterns I've been using, and I've just been looking for, all right, where's your support, where's your resistance, and are you making higher highs going into that, higher lows going into that, or vice versa, right? You are seeing that you had the same level of supply since February. You had the same level of supply, regardless of news, since February. You could not break above 75. And you kept dipping, but every time you were dipping, you were making, for the most part, higher lows, higher lows. The bears were not able to sell it off as much. The bulls were able to keep it higher. They were willing to buy it higher. Once you do that enough times, according to a lot of textbook, 4 or 5 times creating those higher lows should be the formula for it. You have a decent chance of breaking above that supply, and once you do, you can get crazy moves, right? It broke above the supply, and immediately went to the next resistance level. It came back down. The area that was once supply is now a huge area of demand. It went back up to the resistance level. So no, it's not going to probably keep doing this 10 times in a row. It's eventually going to either break this way or it's going to, break down there. But just in hindsight, that was a very interesting move. And, very interesting that, like, of course, they traded to right at the supply level right before earnings, and then earnings smashes it above it. It could have completely gone the opposite way too. Very possible. But these are some really interesting charts to take a look at. There's a lot of ones that kind of look similar. I haven't looked at a bunch in a while. Let me see if I could spot another similar looking one. Fubo is a very similar one, right? You have this level of supply, 324. Regardless of this inverse head and shoulders, actually, we can cut that out for a second. What are you doing for the most part? You're making higher lows going into that. So eventually, if/when Fubo can return to this level, maybe get a catalyst, you can see a crazy move. Maybe not straight up to the next resistance, but possibly. The same thing just happened on the last chart we looked at. So there's a lot of these post-COVID stocks. I don't think Pfizer looks at it. This is why I kind of got into this segment of the stream. I don't know if Pfizer looks like this, but there's a lot of these stocks that were SPACs or whatever that were very hot back in 2021, which are starting to develop this. I've stayed away from this sector for the most part of the year, and these types of stocks have heavily underperformed the rest of them. And like, yeah, you can see these stocks going up 100% in the last 4 months, when like a large cap maybe only went up 40%, not in 4 months, but in the whole year. But like, again, like, you're going up 100% on something like Fubo, it's only going from $1 to $2, right? Where Fubo was a couple of years ago was in the tens of dollars. If you go look at Apple, maybe it doesn't have the same percent move off its lows for the year, but it's at around the same price as it was a couple of years ago. So if you were an investor, you would have rather invested in Apple than Fubo 2 years ago, right? Even though Fubo might have had a better performance percent-wise from May to August. So you always have to understand that separation of things. Let me see if I can find any other charts that look similar. Robinhood is one. This one's a little bit tougher to see it, but again, you have a level of supply at 1275, you're making these higher lows going into it. So I think an interesting part of the market, especially if we get like a dryish September like I was talking about earlier, is looking for these types of stocks, setting up alerts on your trading platforms to see if they test these levels, and then hoping for some sort of a catalyst to come around the point in which they're testing that level, which can help it break above. All right, and a lot of these are also, like we just looked at Hood, it just bounced off the 200-day moving average. Most of these stocks have been rejecting the 200-day moving average for the past few years. They haven't even like I was going to say tapped or touched. I kind of mixed both words. They haven't even like tested the 200-day moving averages. Fisker, one of my favorites, is one of them. But now you're starting to see some of them actually flip the 200-day moving average into a support, right? This whole entire area, it didn't even touch the 200-day moving average once. Now it's bouncing off of it. That's a pretty significant change. So mixing a little bit of fundamental analysis, seeing if these companies deserved to sell off as much as they have, because a lot of them are just part of hype, is an interesting standpoint. I've had these types of talks on my streams dozens of times. There's only a few times where it starts to set up. Airbnb, this is a past one, which is a good example, right? Look at your higher lows. You had your level of supply at 130, apart from this like little move above it. You were making higher lows going into 130, you broke it, you rallied up to 156. See if there's any other ones. Not really. All right, so that was just like a little side note, little educational talk on how to use accumulation on charts. Pretty interesting. So let's take a look at some other stuff really quickly. Nothing really on Bitcoin and Ethereum. The VIX is starting to slightly bounce off the same level it's been holding all year, which is $13. In the chat right now, guess what this string is? Guess it in the chat. Shouldn't have just shaked it because it's dropping, but guess what this is? Alright. VIX is starting to get a little bit of bounce with hidden bullish divergence on the daily. US 10-year flipped these highs. You can see it from February and July into a support, retesting highs of the year so far now. Getting close to it. Hidden bullish divergence on the daily. This looks like a cup and handle. It honestly looks set to go higher in my opinion. If we zoom out here, this was a major bull flag. We've been talking about this for over a year. Hidden bullish divergence. If we go over to like a monthly time frame on the US 10-year, that's a 3-month, but I guess it works too. Like, look at this. All this did from 1987 until the COVID crash was go down. COVID crash happens, you break out of this pattern, and then you've gone from a 2% yield to now over 4% off of not just technicals, obviously everything the Fed has been doing, and inflation, all of these things have played a part in it, but like the Fed and inflation have been around forever, right? It's when you break out of this pattern, you're getting that move too, and of course it creates the classic debate of technicals versus fundamentals in the market. But you know, I view it as like you don't have to argue the two. Sometimes both of them play out together, and it's kind of beautiful. All right, so yeah, let's now do some ticker requests. And it was more of a drier day in the market. I'm not going to be live tomorrow, no morning stream or night stream. It's going to be a busy day for me, but next week, Tuesday, Wednesday, Thursday, same thing. Morning streams and then night streams. So I will be in Discord tomorrow and Friday. Look out for that. And if you want me to look at any charts for you right now, it's the time to do so. Drop them in the chat and we will take a look. All right, so Mansono says Neo. Take a look at Neo. We already looked at it earlier. It's one of the swings right now. I literally alerted it today. Hidden bullish divergence on the RSI, holding the 200-day moving average at a historical support level dating back to 2019. Bullish hammer candle kind of with volume on August 29th. I like the chart right now as long as it can hold $10 for the most part. RC Money says, I want Roku puts tomorrow. On the daily, there's not much I'm seeing. On lower time frames, it already kind of rallied off this breakout, so that's for the most part done. And bullish divergence volume, I don't know. It's going to be risky in both directions, and one direction will probably do well with it. I don't know if it's going to be puts or calls tomorrow, but whatever you do, I wish you luck. I don't really see a game plan I can follow on it for right now. The guy says, is KRE a bull flag breakdown? Bear flag breakdown. Seems like it. Does seem like it. Yes, I would say so, it is. I don't think there's much of a way to argue that. Does it play out? We'll see, but I would say yes, it is a bear flag breakdown. IM says UAL. I think you're relating to the accumulation stuff I was talking about. UAL looks kind of the same. Yeah, it does. Let me clear up this chart. Is this active? No, it's not. Yeah, you're making your higher lows, and then you have your supply over here. Very different than JetBlue. JetBlue's pretty much done this, and it's sitting like right here. But yes, UAL is kind of doing the opposite. Very interesting, and this has not even recovered its COVID crash yet. So it's continuing to hold the 200-day moving average. It's making higher lows. These are the types of charts I've been spending a lot of time focusing on in the past few months. So we got two guesses on the green drink. Mansoso, sorry. It says bubble tea, it's not bubble tea. Max says OJ and green veggies. No orange juice, but there are green veggies in it. Take a look at Intel. If you didn't already, make sure to hit the like button. Helps the channel grow. Intel is pretty interesting. This was a premium swing. Still hasn't hit the third target, or the second target actually. You can see where they are. But let's see everything for a second and take a look at it like this. This is the range that Intel has been in since June. Just waiting to see which way it breaks. That simple. All right. End phase, that is a swing as well. We looked at it previously on the stream. It's a bullish shark. You're retesting your lows. Nothing much has really changed. I think just holding above 115 is key here. SoFi. $8 is the big level. Used to be resistance. Now it's support. It's pretty much just based around that level for right now, I would say so. Clove. Hidden bullish divergence. I'd say it has like a triangle pattern forming here. Just waiting to see which way that breaks. It's in an uptrend short term and has the hidden bullish divergence. It could break up, maybe retest these high at like 160. MA has all-time highs. MasterCard. Same thing, another chart. Just accumulation has really worked so well this year. Look at that. You have your supply, at around 400 bucks. You're making higher lows going into it. You break above it, and then look at the last 2 weeks. You've gone up like 4 or 5%, which for a stock like this is pretty decent. So yeah, it's broken to all-time highs. Probably the only thing to do at this point would to be using fibs. Your first fib's at $433, as long as it can hold 396-ish. All right, so that's your quick update on how the market's doing today. Again, these streams are going to be a lot shorter, straight to the point. I don't want to, spend a bunch of time repeating the same things. So I'll be in the Discord tomorrow. If you want to join, it's free to join. You can see at the bottom of your screen, discord.gg/free trading movement. If you want to be in the live trading, which is not going to be tomorrow, if you want to be in that for next week, look out for the recordings and everything like that. Or if you want to join, you can join. But a lot of education. I hope you're enjoying it. Have a great night. Have a great Thursday. And I'll see you on the next stream.
N'est-ce pas un sanglot que la déconvenue, une corde brisée au doigt du guitariste? Et pourtant je vous dis que le bonheur existe.